Hello and welcome to Pro Trader Strategies market commentary for Tuesday, April the 7th. My name is Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I talked about economic and geopolitical environments and how that impacts the overall market data. That I do the same thing in these daily market commentaries, but layering on top of it some option strategies that I find to implement, or any strategy, to be quite honest. Sometimes it's just a trading strategy. Implement in and around those assumptions we come up with through our market analysis, geopolitical, and the economic environment. So without further ado, let's talk about the economic data that we're getting out, and that's not so much. We did get the NFIB, which is National Federation of Independent Businesses. It's usually, or it is, a small business index, kind of a gauge of how the small businessman is feeling about the overall economy. We've been seeing this reading come in quite nicely above 100, but we can imagine that that number is going to precipitously drop, and it has. It's, well, not as much as I would have expected, to be quite honest. It came in at 96.7, and it was released earlier than scheduled, just so you guys know. Yeah, it got released a little bit earlier, it looks like. So it talks about it's businesses between 1 and 250, basically. And then we got the JOLTS job openings. That came in at 6.88 million openings, which is a little bit wild. I think that was a little bit early. That is for the previous month, but those openings could have been, opened up right before this pandemic started, right? And they just never filled those those openings. So that's a little bit of a wanky thing. We also got a bond auction going on, and that came out. We'd have to talk to Rick Santelli to see what that bond auction is going to come out as for a grade. So keep your eye out for him. All right, pretty wild ride across the board, other than what it looks like here in crude oil. Thursday is that meeting where Russia and the Saudi Arabia, or OPEC, is going to be trying to talk about production cuts. One thing they're talking about is the United States needs to do some production cuts as well to follow suit with what they are doing. And we have not responded to that. My guess is that we are not going to do production cuts at this point in time. Anyway, so crude oil just off slightly in those 20s, as we talked about. And then we've got gold. Gold spiked up into the 1700s. This number is one of the highest readings in a very, very long time, probably since 2008 anyway. Anyway, something to note though, if we look at I'm going to take off a lot of the extended hours trading to give us a good reading of what it looks like during the day session, because the charts look completely different from the overnight trades to just the day trade. And you can see here that the gold futures are off by $7.50. The high, not quite as high as what we saw earlier, but on the overnight session. So you can see that was printed overnight. But the thing is, what I'm trying to show here is that is a very bearish signal at the top of this move there. And then if we move, and even with the chart set up the way we have it, it looks very bearish as well. Bonds coming off by 2 points here on the day. VIX is in negative territory. The equities moving quite a bit higher, probably off the highs of the day for the most part across the board. But you can see here the Dow Jones Industrial Average up almost 800 points. Now let's take a look at what it looks like when we take that extended hours trading off. And that looks pretty bearish when you get that. You get that big gap with that hangman doji there. That is, to me, looking like we covered this gap here on the downside. So that gap's been covered, and now we've got this bearish signal. So as I was expecting us to, continue in a bullish pattern or trend higher, it looks like in the meantime we might get somewhat of a correction, maybe back down to the 9-day moving average, as I think we're going to continue to see this bit of volatility going on. But the thing to really note here is that we covered that gap. The chart without the overnight session looks pretty bearish with this move here, but we have covered, let me get a white line there. So we've covered this gap that was created. So that is a fulfillment of the charts. A lot of times the market wants to come back and fulfill those or fill in those gaps, which we've done. So that really gives credence to this market rolling over at least a little bit here going forward, maybe for the rest of the week as we start getting more and more data out about coronavirus. Again, NASDAQ up on the day, 200 points. This would normally look like a very strong continuation pattern, like we are in a bull move back above the 200-day moving average right now, above the 8165 here, which is a Fibonacci extension that I haven't gotten rid of or updated, but it's still going to, as you can see, act as a support and resistance there. It kind of cantilevers between the two volume nodes here. Now I was expecting us to not really hold this number and kind of bounce in and around here, but we've gotten that blast off. Again, if I take out the overnight session, you can see again very bearish pattern there at the top as it has spiked up. So E-mini S&Ps are going to look very similar as well. We've come up, tested the Fibonacci here that I have set up based on this low. That was for the extensions going higher, but gotten above that. It is trailing off a little bit. The thing to note really here, I think, is that when you take out the overnight session, again, it looks like we've gone up to try and cover these gaps, and market has topped out, and to me it looks like we are going to want to maybe even stay if we get like a trend channel kind of going like that. It's a pretty dirty trend channel, but popped above that would make some people believe that we are looking to come back down into this area, which I don't debunk that, I guess, for lack of a better phrase off the top of my head, shooting from the hip here. And you can see that we've gotten up there. It just seems like it's blown off a little bit too much steam too quickly, and it's going to want to roll back over maybe in the next couple of days and start retracing back down here, fill in some volume in and around there. So you can see on the overnight session, we did print those intraday, but market really starting to look a little weak as we go forward. All right, SPY, you can see this looks like those charts with me taking out the overnight session. Why? Because SPY is an ETF and it's not traded overnight, you guys. So it looks pretty bearish. Now, if you remember with SPY, I had put on, I had bought some of these really small, and I ended up buying them at 257.52. So I've gotten that nice move higher in the last few days. I did take some heat on it, don't get me wrong, but I went ahead and covered some of that. I want to take off some of my long deltas, you guys, and add some short deltas on these big moves. I've done webinars, or smaller than webinars, really. They're kind of longer than daily market commentaries, but on selling the rips and buying the dips. We aren't out of the woods yet, and I think that there still may be some something coming down the pipe that could cause this to roll over. It's a very fragile rally right now. We are in a very tentative place here, and the markets are susceptible to any bad news right now. Are we out of the woods completely? I don't think, there's a lot of people saying we're going to go down there and test those lows, but I believe that if this coronavirus starts flattening the curve, if you will, and we are able to manage this, as we're seeing across the pond, and we're seeing in Austria that they are starting to lift some of their lockdown, and they are going to be the litmus test on to see if this really starts to explode. So a lot of upside right now in the market is based on some of these numbers coming out elsewhere, that the flattening of the curve is working. They're starting to open things up a little bit. And, I do believe there's a lot of pent-up demand on people wanting to get out of the house. So I think that we could see the market really recover relatively soon after this. I don't know that we're going to see those all-time highs anytime relatively soon, but I do think that the market wants to go higher and people went to get out there and spend. So I covered I covered all my SPY trade, and I sold them at 272.61. So 272.61, just a little bit lower than we currently are. The reason why is based on this chart setup. No, it's not confirmed. Tomorrow we could see it move even higher, but I always seem to be a little bit early at everything, and when I see stuff like that, I decide to make moves. I usually get in a little bit earlier than the confirmation and out earlier than the confirmation happens. All right, so out of my SPY, the other thing that I was looking at is in Disney. Now, Disney, you guys know I have taken some heat on this trade here, and the market has not been good to me. I got into this trade back in December. So you can obviously see that much higher than where we are, well before this whole coronavirus thing came out. And I did it according to my rules on the synthetic long. And I did those with the 145 calls that I sold the, I bought the 145 calls and sold the 145 puts. I did that for a debit of right around $3. Now, when the market starts going against us, staying mechanical, lowering our overall basis on this trade is what I did and what I have talked about we should be doing with this kind of a trade. And I did that by basically selling the Jan, sold the 160 calls, rolled those out to the February 160 calls, and then did the March 160 calls, sold some more March 145 calls in there, and that was just based on a trade on that move down. Then I sold the March 110 puts in there. That I collected $1.03 for. Those got put to me. The synthetic longs, I am just waiting every single day for somebody to put me that stock at 145. But with all of those rolls out, the 145 calls and puts where the synthetic long is, I did a $3 credit, right? Paid $3. Well, I collected a total of just better than $3 on all of those rolls out in time. And then additionally, the 100 or the 110 puts that I sold that were put to me, I collected $1 for. So my break even on those 110 puts is really 109, right? Because I got that collection. Now, with that overall, everything put together, jammed in there, my break even is somewhere right around, off the top of my head, would be about 127 and a half, okay? So break even on all my stock and all of the collections that I've gotten. Now, today I ended up going and I sold the May 130 call, or 30 calls in there for 50 cents. So another collection. If those stock get called away from me, it's slightly higher than where my break even is on it, right? Because now my break even's, like I said, 127 and a half. So sold those 130 calls. I will lighten up my load on that, and look at where 130 calls are. So great strike location, quite high, above the value area and right around where the point of control is. So if the market wants to go there, then I would be happy to get out in and around that point of control, at least a partial of my overall position there. Again, same chart kind of set up. All of these charts for the stocks look very toppy right now. So more than happy to start adding some short deltas in my portfolio, get out of some long things. That's why I took off this SPY, added some short deltas with the Disney. Now there's a couple other ones that I'm kind of holding on to here, and we've got EA Sports. Look at that massive move today. It was all over the place, just slightly higher on the day, but near the highs. So I'm happy with that. I don't love that chart setup, believe it or not, with that massive move there. But I still believe in EA Sports. So I haven't added any short calls on that. I looked at it, to be honest. I was looking at about the 120 handle in there, and the markets are just really wide. And mostly that has to do with that volatility we saw in the market moving today. Nobody wants to make a market very tight in there if we're going to have moves in EA Sports of over, what was it, 10% basically from the high to the low, almost a 7% move from the high to the low in a matter of minutes. It was a bit of a whipsaw in there. So that I am just keeping an eye on, but all of these charts looking pretty iffy, but my P&L looking great today. Anytime we get those rallies, like I said, the idea is to layer on those covered calls on these spikes, because I don't think we're out of the woods yet. So those are things that we do to stay mechanical, lower our overall basis in our portfolio, and ultimately when we get these nice rallies or start breaking out of this, your cost basis is going to be at great strike locations. Okay, so that's about all I've got for you guys. Working on the webinar for Friday, we are going to be doing ratio spreads now. So I'm going to show you how to layer on some risk into these trades, but with that risk comes extra reward, and we'll talk about all of the nuances with that trade, how we build that thing out so that we can increase our probabilities of success. This type of strategy would be great to layer on top of existing positions that we already have as well, especially on these short call ratio spreads. So check that out. Go to protraderstrategies.com. These are the ways that we are going to get ahead of this game, despite the fact that we're seeing some bearish market indicators and things of that nature. All right, so check that out. Also, take a moment to go over this disclaimer. We are an educational company. I am trying to talk about the things that I'm doing in these type of markets so that you guys get a better understanding of how these are actually implemented to increase your yield in your portfolio. All right. Yes, you can find out how to do this online or watching TV, but you know, that type of information is a little bit sketchy, and I talk about it in my webinars why those mainstream media people sometimes do not have the best mechanical setups for their strategies. All right. So anyway, without further ado, I'll let you guys go, but please read over this. Remember that you could lose money while trading or investing. And past performance is not necessarily indicative of future results. And if you can't take that, take it easy.